Okay. All right. Hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer, nothing in this podcast or any of our other materials should be taken as investment advice. James or I could have positions in any of the stocks we may mention today, and we reserve the right to change those positions at any time. So make sure to always do your own work and always consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be a startup called EOS Energy Enterprises. So what is EOS Energy Enterprises? Basically, what they do is they produce these types of batteries that are based on a chemistry that is based on zinc rather than traditional battery chemistries, which are primarily lithium based. And the bull case for these types of batteries is that although they are less performant and less efficient than the lithium batteries, EOS claims that they can be up to 30% more cost effective when you think about the cost per unit of storage, energy storage that these zinc batteries provide. And so the target use case for these types of batteries is mainly like grid scale renewable energy storage. So if you think about wind and solar, one of the biggest downsides obviously is that when the wind is not blowing or the sun is not shining, you don't have energy, and people need energy 24/7. And so theoretically, if you have large banks of batteries like those made by EOS, you can use those batteries to store that energy when you have wind and when you have sunshine, and smooth out production so that you have availability 24/7. Taking a look at their financials, EOS, they went public in the SPAC mania of 2020 and 2021. Since then, they've never been able to ramp up revenue. So their revenues remain stagnant at well under $20 million per year. Meanwhile, they're losing hundreds of millions of dollars of negative free cash flow and negative operating income. And because of that, they've had to raise significant amounts of dilutive funding. And even so, they're on track to run out of cash without doing more significant dilutive funding by the summer of 2026. So why has their business model failed so badly? So throughout 2021, 2022, up until recently, they failed to generate meaningful revenue. Originally, one of the biggest reasons for that was because of their claimed supply chain issues, which they've only recently claimed to have resolved. So that prevented them from ramping up production and being able to drive revenue. Also, during the past several years, the prices of lithium, and specifically lithium grid scale batteries, have declined significantly. And so EOS's zinc-based battery technologies are no longer a cost-effective, they're no longer as competitive on a cost basis than the traditional lithium technologies. And so suddenly you have competitors like Tesla and other major battery producers that are produce higher quality batteries and potentially even no more expensive than EOS's zinc-based batteries. Now, going back to EOS's stock price, I just have the chart here from since they went public. Back in 2020 and 2021, when renewables and EVs and all those sorts of things were all the craze, EOS's stock price enjoyed a huge hype from investors. But after their supply chain issues became very, very apparent, their stock plunged over the course of 2022, 23, and 24. However, in the second half of 2024, there's been a significant, as a percentage-wise, increase in enthusiasm around the stock, and that has coincided with the company saying that they're finally on the verge of a big breakthrough, and they're expecting their production to be able to be ramped up and for them to generate significant revenue into 2025. And so this is a very interesting setup, and I'll kick it over to you, James, to discuss what this means for the company's future.
All right, thank you. So before we move on with to the main topic, just a quick reminder to anybody who does not already know, we have a website called differentiatedanalytics.com, where, among other things, we provide premium short selling research. So we identify companies which we believe to be either fraudulent or overvalued, and then we write a very detailed research report explaining our bear thesis. So if you are at all interested in our premium short selling research, make sure to go to differentiatedanalytics.com. The link is in the description below. And for a limited time only, if you use the promo code WSM50 at checkout, you can get 50% off the price of the subscription, which brings the cost down to just $10 a month, which we think is very attractive. So with that out of the way, let's get into EOS. So I think Ryan basically explained what they do, making zinc batteries. Zinc batteries are less efficient than lithium batteries in that they don't carry the charge as well. You lose more energy through the charging and discharging process of the battery. But the claimed advantage, as Ryan explained, was that zinc, it's supposedly much cheaper than lithium. So EOS claimed that they could make their batteries at a much cheaper price. One thing I'll add, just this isn't really that material to the story. But one thing I thought was kind of funny is their corporate logo is EOS, positively ingenious, and that's probably the single most arrogant corporate slogan I've ever come across, which is ironic, as we will see, given what a disaster operationally this company has been. Yeah, we've already gone through this. Ryan already explained the disastrous financial performance. But the good thing with these SPACs, EOS went public via SPAC. Every time a SPAC goes public, they give their fancy SPAC presentation where they talk about, we expect to generate massive revenue. Our revenue is going to ramp up and grow massively over the next few years. So the blue line represents their claimed represents their revenue forecast from the SPAC presentation. So according to their SPAC presentation, by 2024, they should have generated $1 billion of revenue. In reality, in 2024, they only generated $15 million of revenue. So they have missed their SPAC target by 98.5%, to the point where, their real revenue line, the orange line, is basically not even visible compared to the massive revenue that they claimed that they expected to generate. So with these SPAC companies, it's always good to look at the track record. Now, as Ryan said, EOS's stock surged massively since, in the second half of 2024 and even into the beginning of 2025. And the main reason is the company claims, they're on the verge of a big breakthrough. They have finally resolved all of the supply chain and production issues that have plagued them in the past. So while they only generated $15 million of revenue in 2024, they now expect that they will generate at least $150 million of revenue in 2025, a 10x increase. Well, that sounds very good, but there's really two issues, right? First issue was their ability to get production up and running, and let's just give them the benefit of the doubt and say that they can indeed fix their supply chain issues and start massive production in 2025. Well, then the second issue is whether or not there's actually enough demand from customers to buy their batteries, because as Ryan explained in the past, lithium batteries have superior performance characteristics compared to zinc. So will there really be customers willing to buy the zinc batteries? Well, EOS claims that this is not a problem because they supposedly already have $682 million worth of an order backlog. So customers have already placed orders for $682 million worth of batteries, representing 2.6 gigawatts of batteries, or gigawatt hours of batteries. And so once they ramp up production, they can just fulfill these orders that they already have. But it's very important to look at who are the customers who have placed these orders and whether they actually have the ability to follow through and actually pay the money. So EOS does not disclose in granular detail who the customers are that make up this backlog, but they have given sporadic disclosures over time, which can give us a pretty good guesstimate or a pretty good idea of who are the customers within the backlog. So our first data points comes from the second quarter of 2023. And it was in July of 2023. So it was actually during the third quarter of 2023. EOS provided some commentary about who their customers within the backlog are. And the two companies they mention is this one company called International Electric Power. And they had previously disclosed that International Electric Power, IEP, had signed a deal to purchase 1 gigawatt hour worth of batteries from EOS, and that's a huge amount of batteries, right? And then the other customer was this company called BridgeLink Commodities LLP, and they disclosed that as of July 2023, which was, that is during the third quarter of 2023, BridgeLink represented 45% of the company's backlog. So now we know that there's, one of the backlog members is IEP, which had a 1 gigawatt hour deal already signed by this time. And then BridgeLink Commodities, which is 45% of the backlog. So I have made this table which tracks their backlog over time, because every quarter they disclose the size of the backlog in terms of the dollar amounts and also the number of gigawatt hours. So starting in Q3 of 2023, they claimed that their backlog was $538 million and 2 gigawatt hours. And BridgeLink, they said, was 45% of that backlog. So that's 45% of 359 is $242 million. And IEP, they had this order that for 1 gigawatt hour, I do not believe that they disclosed the dollar amount, but they said that their total backlog at that time was 2 gigawatts. So, obviously 1 is half of 2. So that means IEP was half of their total backlog, which would have been approximately $269 million. Here, we're just assuming that, the price per gigawatt is consistent across all of their customers. And so BridgeLink and IEP represent, the vast majority of the total backlog by this point. And, if we look at the backlog over time, there were not any, at least to my knowledge, there were not any very large or, hugely significant orders until in the fourth quarter of 2024, they got a second order from IEP. So in addition to the 1 gigawatt hour order, which has not yet been fulfilled, IEP placed another order for 400 megawatt hours worth of batteries. And again, if we assume a constant price per megawatt hour, that represents $105 million. And also in the fourth quarter of 2024, they received an order from a utility company called City Utilities, and it was 216 million megawatt hours worth of batteries, which represents approximately $57 million. And if we add all those up, that represents, BridgeLink, IEP, and City Utilities makes up the vast majority of their claimed backlog. Now, City Utilities is a utility company in Missouri. From what I can tell, it looks like a completely legit company, and they probably indeed have $57 million that they can pay. So this City Utilities order is probably legit. Now, in the remainder of this presentation, I'm going to express extreme doubts as to whether or not BridgeLink and IEP will actually be able to fulfill these massive orders. And BridgeLink and IEP together represent approximately 90% of EOS's claimed backlog. So let's start with BridgeLink Commodities LLC. So if you just Google BridgeLink Commodities LLC, you're not going to find anything. You can't find their website. But every time when a company like EOS releases their press release saying, "Oh, we got our 1 gigawatt hour order from IEP," typically the standard practice is you will have a quote from EOS's CEO, and then you'll also have a quote from the BridgeLink, from the customer. So you'll have a quote from a BridgeLink executive, and they usually both say some very positive things about this deal that they just signed. So in the case of BridgeLink's order that they placed, the person that provided the quote for the press release was a man named William Flaherty. And William Flaherty at that time was the managing director of BridgeLink Commodities LLC. And he's the one who presumably was in charge of signing the deal with EOS for the order that they made. And if you look at, we can see on LinkedIn, he worked for BridgeLink Commodities LLC, but if you click into the BridgeLink Commodities, you will find that this is an unclaimed page. So the LinkedIn profile for BridgeLink is no longer active. And if you try to go to their website, it looks like they used to have a website, but the website is no longer operational. And William Flaharty, the managing director who signed the deal with EOS, he no longer works for BridgeLink anymore. So it kind of looks like this BridgeLink company just disappeared. You can't find any information about it online. And this is a company that, supposedly has, placed over $200 million of orders for EOS batteries, but they don't even have a website. And I don't know. Maybe this BridgeLink company does exist. They're just flying under the radar. But it looks very 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 suspicious. It's like this company just disappeared off the map, and we're supposed to believe that they're going to have $200 million to buy EOS batteries. Now, the situation for International Electric Power is also doesn't look very good. So the person who provided the quote for the press releases when EOS announced their deals with IEP was this guy, Peter Daly. Peter Daly is the CEO of International Electric Power. But interestingly, International Electric Power, they recently changed their logo, and and it looks like they rebranded the company, and the company is now called Decarb LLC. So they changed their name. And according to LinkedIn, they only have between 11 and 50 employees. So this is a pretty small company. And this is a company that's supposedly going to place hundreds of millions of dollars of orders to EOS. This is a very small company. And if you go on Decarb's website, they talk about the type of projects and what they've done in the past. And, it's here on the right. They do commercial operations and risk management, probabilistic cost modeling and liability settlements, independent engineering and due diligence. And so if you look at the types of projects that they have done in the past, this Decarb LLC, it appears to be like some sort of consulting firm. They did independent engineering and due diligence. So it sounds like they work in the energy industry. When some energy company needs to have some due diligence done or some research done or whatever, they'll hire Decarb LLC as like a consulting firm. And if they are just a consulting firm, well, that would make sense why they only have a few dozen employees. A large energy company that's actually deploying hundreds of millions of dollars worth of batteries, you would think would have more than 50 employees, right? So I have extreme doubts as to whether this company would be able to actually fulfill these orders that they claim to have. And, it's a huge backlog. They say, oh, we have almost $700 million of backlog, 2.6 gigawatt hours, a huge amount of batteries that they claim they're going to sell. Now, you would probably expect, if you didn't look into the customer list, you just said, oh, grid scale battery company has 2.6 gigawatt hours worth of orders. You would probably assume that the customers are large utility companies who could deploy these grid scale batteries for, into their utility grid. But instead, we get this BridgeLink company, which appears to have vanished, and this tiny IEP company, which looks like a consulting firm. And so that gives me extreme doubts about their supposed backlog. And then finally, as Ryan explained earlier, potentially one of the reasons why they are having problems selling, having problems finding legit customers is because the zinc batteries that they are producing are no longer cost competitive with the lithium batteries. So if you look at EOS's backlog, so they have a backlog of $682 million for 2.6 gigawatt hours worth of batteries. So if you divide those two numbers, you get a cost per kilowatt hour of 262. So they're selling, they claim that they're selling their batteries for $262 per kilowatt hour. Well, the thing is, we can look at the price of lithium battery packs, and this here is from Bloomberg. The price of lithium battery packs has been declining very rapidly over recent years. The reason for that is because as lithium batteries are being produced at larger and larger scales, there are innovations in terms of the manufacturing process, and there are economies of scale which make the unit cost cheaper. So as of 2024, the cost of lithium battery packs has declined to just $115 per kilowatt hour. This is significantly less, in fact, less than half of the price that EOS is claiming that they're selling their zinc batteries for, which the entire premise, the entire bull case of EOS was that their zinc batteries were going to be cheaper. In reality, the price is actually double of what the lithium batteries are because the lithium battery prices have declined so much. So it really doesn't make sense why if you're a utility company that wants to deploy grid scale batteries, lithium batteries packs are superior in terms of their performance characteristics, and they're cheaper. So obviously you're going to choose that. Why on earth would you choose the zinc battery? So I have huge questions as to whether or not they will actually be able to sell their batteries, even if they can ramp up production as they claim. And then we have to talk about the liquidity situation. And as Ryan said, we believe they are on track to run out of money, perhaps by the middle of 2026. And I'll walk through why that is. At the end of 2024, the company had $74 million of cash on hand. Subsequent to the end of the quarter, so during the first quarter, they also borrowed $22 million from an investment company called Cerberus. And then finally, in late, in 2024, they got a approval for a loan from the Department of Energy, and that is part of Joe Biden's Inflation Reduction Act. So the total loan, I believe, was $303 million, the total DOE loan, and they have already received some of it in the fourth quarter, but not all of it. So there's still, of that $303 million loan that the DOE awarded them, $235 million is still outstanding and has not yet been delivered to EOS. Well, now Trump is in charge of the White House, and Trump has a very different views than Biden insofar as green energy and providing subsidized loans to green energy companies. So there's some talk and some speculations that Trump may, withhold these loans and not allow the money to be dispersed. Although it's kind of questionable because legally, because these deals have already been signed, maybe the DOE is obligated to eventually disperse this money. This is an open question. I don't know. But let's just give the benefit of the doubt and assume that they are also going to receive the entire amount of this DOE loan. That will give them an additional $235 million. If we add up all of their total liquidity, that brings them up to $331 million. So that is a decent amount of liquidity, but they also have, a huge amounts of liabilities. So there's this investment company, Cerberus, who loaned them a total of $210 million at an interest rate of 15%. So that's a very high interest rate, and that expires in 2034. So that's quite a ways away. Previously, they issued a convertible bond, a $22 million convertible bond at a usurious 26.5% interest rate, which is crazy. You probably have a credit card. You personally probably have a credit card where you could borrow money on your credit card for less than what EOS is paying for this convertible bond. And I believe this was a bond that they sold back in, I think, 2023. That's when the company was in a dire situation and they were desperate. So they had no choice but to take on this extremely expensive debt. Now, this is a convertible bond with a strike price of $1.67. So it is well in the money, and the interest is paid in kind. So that means the interest accumulates onto the principal. They're not paying that interest as cash. It just accumulates onto the principal. So once this bond matures, which is in June of 2026, it's going to be, a much larger amount because that interest has accrued. And then finally, they have another convertible bond of $100 million at 6% interest, also expiring in June of 2026. And this is at a $20 strike price And right now, EOS's stock is only $4. So this is massively out of the money. And this one is also paid in kind. So this one almost certainly will not convert into stock, and they're going to have to pay this back in cash. And then finally, they have this DOE loan, assuming that they indeed get the full disbursement. That's $303 million at a 5% interest rate, expiring June of 2034. Now, you have this $331 million of liquidity right now. The company burned $187 million of negative free cash flow in 2024. So, assuming that they maintain that current level of cash burn, they have approximately, a little less than 2 years worth of runway in terms of the cash burn. But that $100 million convertible bond expires in June of 2026, and the interest is paid in kind. So that will accumulate to $134 million of cash that they will have to repay in June of 2026. And based on the current liquidity situation and the current run rates of cash burn, they likely will not have enough cash on hand to pay for this, to make this bond repayment. So that's why we expect, unless they can pull a rabbit out of a hat and indeed start generating significant revenues, which we doubt, they're likely going to be more dilutive equity raises or dilutive capital raises in the near future. And then we'll talk about the dilution. So a lot of this capital that they raised it back in 2023 and 2024 when the company was in severe desperation. So they had no choice but to agree to capital raises at extremely unfavorable terms. And the most unfavorable was the Cerberus loan. So Cerberus was this investment company that lent them $210 million at a 15% interest rate. But in addition, to paying the 15% interest, EOS also gave them warrants to purchase 158 million common shares of EOS common stock at a strike price of like 1 cent. So Cerberus basically got 158 million shares of common stock basically for free, just by virtue of them having lent them this money. And that is not included in the current share count. And then there are also some other warrants that are not related to Cerberus, but had been given to other investors. And of those warrants, the ones that are in the money can convert to an additional 49 million shares. And then finally, there's that convertible bond we talked about in the previous slide that is in the money, and that will convert to 19 million shares in 2026. So if you add up all of these, they have 227 million common shares outstanding currently, plus 158 million warrants to Cerberus, plus 49 million other warrants that are in the money, plus 19 million from that convertible bond. So if you add all those together, the fully diluted share count would actually be 453 million shares. Currently, their share price is $4. So if you multiply those two numbers, their fully diluted market cap is $1.8 billion. Plus, they have some debt. So they have approximately $600 million of debt, excluding that the convertible bond that's in the money. So we're not double counting here. So if you add up the market cap, the fully diluted market cap, plus the debt, their enterprise value is approximately $2.4 billion. This is, and I'll argue, this is an extremely high valuation. Back when the company went public by merging with a SPAC all the way back in 2020. At the SPAC transaction, EOS had a market capitalization of $550 million, and they had no debt at that time. Plus, they had $120 million of net cash. So the enterprise value is the market cap minus the net cash. So at the time that the SPAC closed, their enterprise value was only $430 million. And now you would think, so they had the SPAC, they gave these extremely optimistic and rosy projections of what they thought that their future revenue and operational performance would be. Their actual performance was massively worse than their original projections. as I explained earlier, they missed their 2024 revenue target by 98.5%. They originally said that they expected to generate $1 billion of revenue in 2024. They only generated $15 million. So this company has been a massive disappointment, and they have massively underperformed their own projections. Now, you would probably expect that, given that they've sort of been discredited operationally, their valuation, you would think that the valuation should go down, but actually the valuation has massively increased. The current enterprise value of 2.4 was it 2.4 billion dollars? Yeah, 2.4 billion dollars is 5 times greater. In fact, more than 5 times greater what their enterprise value was right after the SPAC merger. So despite having, been such a failure, their enterprise value actually went up, which is crazy. And I think probably what one of the reason is, this is just speculation on my part, is that a lot of the types of people who invest in these, SPAC companies, these kind of failures of companies, tend to be novice retail investors who are not very sophisticated and don't really understand how to, read financial statements and the like. So they just see, the stock has started off at $10. Now it's only $4. So I think I'm getting a bargain. But in reality, the enterprise value is actually way higher because there was such a massive amounts of dilution, because back, in 2023, 2024, when they were in a desperate situation, they had to raise capital at extremely unfavorable terms. And this extreme amounts of dilution actually makes it so that the valuation is much higher, despite the fact that the share price is much lower. So that is something that you have to take into account. I think that the valuation is absurd. They claim that, their new guidance for 2025 is that they're going to generate $150 million of revenue. Now, we explained why we have serious doubts as to whether they're actually going to be able to achieve that. But even if they achieve that, $150 million of revenue, they have now an enterprise value of $2.4 billion. So that's well over 10 times revenue, which is a very rich valuation for a company that has been a complete and total disappointment historically and has all these problems. And their customer backlog is very suspicious. So the valuation makes absolutely no sense compared to the fundamental realities of the company. So I think that about wraps it up for everything we had to talk about EOS today. As always, if you have any opinions or thoughts about EOS, please let us know in the comment section below, and we will see you all on next week's video.